Yes, good afternoon. So today is 9th of January 2019. We're just beginning the month. So there's something we said last week. We did say that we're going to look at how to trade gaps today. How to trade gaps, not actually morning gaps, but just gaps, how to trade gaps. So we want to check online to see what gaps are before we look into it properly. Just a second, we just search gaps in Forex. It's loading. So gaps are areas on the chart where the price or stock or another financial instrument moves sharply up or down with little or no trading in between. So what this means is, if you cannot find any data between where the price closed and the current place and where the price was previously, something like this, let's check. So gaps normally do not appear on currencies. They do appear mostly on stocks and other indices. Something like this here. This is a gap. Yeah, just a second, we find one good one. Not very good. Just a second here. This one, just a second. We're trying to find at least where there's one good gap, and we'll use that to explain what we are supposed to look at today. Not appearing. Load another one, SP500. I think there's a very good gap there, so we can refer to that one. This one here. So we have this candle here. There's this red candle that opened at this point here and closed somewhere here, and then you have another green candle that opened here but closed somewhere. So in between where this candle closed and where the next candle has opened, there's some space. This is what is called a gap. So anytime there's a space between where the previous candle closed and where the current candle is opening, then that's called a gap. There's a gap between this place here and the next one. Let's load it. This is how candles are supposed to move. Yes, when you see a red candle, something like this, assuming you're on a chart, then you see something like this. You see one red candle, it opened here and then it closed somewhere here. You expect the next candle to open slightly below where the previous one closed, somewhere there, and close on the lower side. You expect it to open here and then close somewhere. So in case this does not happen, that the price, instead of opening here, it opens somewhere here, then this is a gap. This is what we call a gap. Anytime the price fails to open immediately after the close of the previous candle, then that's called a gap. You need to wait for price to come back to try to fill that gap. Wait for something like this. Wait for price to try pulling back upwards, something like this. Wait for price to come back to the same place, then look for that sell. So this one example of a gap. Let's look at it on the real chart. That is this one here. We have this long big candle that opened here but then closed here. So we expected this next candle to open somewhere below this place here and close where this one here should open here and then close somewhere, but that didn't happen. So it opened below, went high up, and then closed below. So that's called a bearish gap. I will put it. So from the definition, anytime the price opens away from where, very far away from where it closed, then that's called a gap, something like this. This is called a bearish gap. A bearish gap. I will not save that. There's also another gap here. We have a gap here. Let me highlight it so you're able to see. this candle here, you can see we have one green candle that opened here, but then it closed up. Then instead of the next candle opening immediately after the close of this candle, it actually opened above. So the act of opening above is called a gap. It actually gapped from this point to this point. This is the gap now. Gap. So this is an example of how gaps look like. There are also others. You can see there are several. There's even this is a gap. We have price opening here, closing here, and then the next candle opens exactly below it. I mean, not below it. It opens several pips below it. How many pips are this? It opened like 5 pips. So this is a gap, but it's a very small gap. There's also this one. We have this one. There's this place where the candle closes here, and then the next candle opens above where the previous one closed. So this is also a gap. It's a bullish gap. Bullish gap. Bullish gap. So we'll save that one. We want to write at least it looks better. We can refer to it at some point in the future. 3. So whatever we are how to trade gaps, these are examples of gap. We are not looked at exactly. So those are just examples, few examples of how gaps look like. There's also this one. We also have this place here where the price actually closed at some point below but opened several pips above where it closed. There was this one here, they closed here and then it opened above everything. This is a gap. This is a bullish gap. So to understand gaps properly, there's something which I wrote here. It's very, very important. You need to understand how gaps relate to volume. There's this thing here, that 3 things, important things to check for before continuing to gaps. So you need to trade gaps in relation to volume. What I mean by volume is how many ticks there are in a candle. Like to add volume, there is nowhere here written volume, but you need to understand exactly how to relate volume and gaps. You put your mouse here over the close of a candle. You see that the last option we have time, which is 2016 06 30 00. Then there's the opening price, high price, and then low, then close, and then the last one is volume, which is 21,881.0. So that volume is just the number of ticks in a candle. You can also get this volume. You need to right click, then you go to properties, and then there's common. You need to add show volume, and they'll appear on the lower side here. So in this case here, we have the volume being 21,881.0, and then the next one has a volume of 15,18.4, and then the next one has a volume of 67,18. Then this one has a volume of 16,67.2. Then the next one 22,62.4. So in this case, you have to understand exactly how to relate volume to gaps. Like there's a place I've written here that high and low volume is useful. Is only useful if they occur around a key support or a key resistance level. So look at SP500. There's this one here. So basically I'm just going to try to explain to you how you can relate gaps and volume, and how the best gaps, how to trade the best gap, because gaps do happen even there's a gap here, there are several. So how can you know exactly when a gap is going to work your way or it's not going to work? There's a level here. So the very first thing is you identify a key level, which already we've done in this case. There's this one. We have a support, then you can see a break below this place here, below the line. After this breakout candle, we now check to see that the next candle actually, instead of opening slightly below where this one closed, it gapped below and went even lower. So anytime there's a gap below a key level, then it means the price continuing even further to that direction. So you can see we have a key level, then there's a break below that key level, and then we see a gap below the same level, and then a candle appears which has a higher volume than the previous ones. So this is the volume. This thing on the lower side, like some columns, some bars. This stands for volume. Another way to get the volume is to place your mouse where the candle closed, like this, and you'll get the volume. The very one on the lower side, 97.56.4. This is still the volume. So anytime there's a break below a level and then you see a gap followed by a candle which has a bigger volume, it means possible that we are headed towards that direction. You're supposed to look for a sell. So we're going to write that down. I already have it written somewhere, but I'm just going to write it for the sake of it. There's this one. There's a support here. We have a support there. Then there's a candle that breaks below everything. Break below candle. Break below candle. After that breaking below, you can see there's a gap that forms immediately after the candle that went below it there. So we say a gap after the candle that broke below, and then after this candle you see instantly after the gap, volume has increased. This is the volume. We have the volume here. So we say the candle that followed the gap, has a higher volume. This is a sign that we are heading further to the lower side. So we'll save this one and you have it somewhere. We are able to refer to it at some point. Gap 2. What is this? 5. So what I'm trying to say is that anytime before you trade any gap, if you want to trade gaps, that is, you have to get a key level first of all, and then you have also to know how to work with volume. The number of ticks in a candle, how many times there were trades within that candle. So like in this case, there's a level here, level 18.8 used as a support previously, then price breaks below it, then immediately after that breakout you now see a gap headed to the lower side. What you do here, you don't sell immediately. If you've been listening to what I keep saying, is that you're supposed to wait for price to come back to the same place before you pick a sell from that point to the lower side. So in this case, from what you just do, I'll see this as a good support, another good support, and then there's a candle that breaks below that support, the one I've mentioned, and then immediately after this breakout we see a gap. This is the gap. Then you now see that this candle here, the one that formed the gap, has a very high volume related with the previous one. So this is a sign. When you see anything like this, you should wait for price to come back to this line here, and then you look for that sell. You don't just sell just because there's a gap. You have to wait for price to come back to that key level, then you sell it and have your take profit on the lower side. So we've already looked at that. We want to see another example where a gap has been used the same way we just said. There's a key level broken, and then we see a gap which has higher volume. Like there's a gap and then there's a candle after that gap which has a higher volume. Something like this. We have a resistance line at this point, a resistance here. There's a resistance, another resistance, another resistance, then price breaks above it, tries to come down, and then there's a gap. So there's this doji candle that actually closed that point 2411.1, we expected the next candle, which is now green in this case, to open just around the same place, but this didn't happen. Instead it opened way above. So this is another gap. We want to see if there's any candle that after this gap which had a bigger volume. That's this one. So the most important thing, you get a key level first of all, and then see if there's a gap after the break of that candle, and then see if there's volume increase in any candle after the gap. We have a resistance there, there's another resistance, we also have another resistance there, then the price breaks above that resistance zone, there's a breakout above, then it starts to go down, and then we see this gap here. There's that gap between this doji candle and the green one. There's a gap, a bullish gap, a bullish gap. Then after identify these two things, there's a key level, there's a break above everything, you notice there's a gap. The next thing is to look for a candle that has a bigger volume. So that candle is this one, it should be this one here, this candle, this candle, and then this is the volume that stands for that candle. There's a volume increase after the break of the above the key level. There's a volume increase after the break above candle. So this is a sign that we are continuing upwards, sign that we are continuing upwards. Therefore you look for a buy. Therefore we look for a buy. So as I've mentioned, the most important thing first of all is identify a key level. After identify this key level, wait for price to either break above it or bounce from it. Then you get a candle that has a higher volume. I've already said how you can get volume. You can add this. I've added this one here, the green thing. You can add it, or you can put your mouse around the close of the previous candle. We save that. Gap 2, gap 4. And then, so the most important thing here is the first thing, you need to understand how gaps relate to volume, and how key levels also relate to volume and gaps. If you have a level like I have this resistance here, price goes down, comes back to the same place, goes down, comes back to the same place. You need to understand that anytime the price approaches this key level and then you see an increase in volume, then it's likely that that level is going to be broken upwards. You also need to check for gaps. Like, assuming I have a key level like this, I have this resistance line being significant, I have a key resistance here, and the red color is not very good, so we change it to be what we want it to be. We have a resistance there, a resistance which has been broken. Price comes back to the same place, you're supposed to look for a buy. So assuming the level has not been broken like that, and you don't know exactly what will happen in the future, then all of a sudden, when price is approaching this level, you see increase in volume. Volume is this: you put your mouse above the close of the candle, the lower one, 13.39.9, that's the volume. So assuming you see that price approaching a key level, then suddenly the volume increases, that is a possible sign that that level is being broken. So you're supposed to wait for that place to be broken. Then if you see a gap after that, you now trade it. So that should make some sense, that there are three things, if not three, there are four. You have to get a key level, and then you have to keep monitoring the volume while price is approaching that level, and then if price breaks above that level, then you see a gap in direction to where the level that's being broken, then you now buy it upwards. There's one that was not a good one. We have a resistance here, a resistance, a resistance, a resistance, a resistance, then there's a break above it, and then instead of seeing a gap, a bullish gap, you see a bearish gap but above a key level. This is not a very good one. So in this case, I'm not doing anything. I cannot sell this one because there's a level here which I'm working with. Price has gone above a level, but then I see a bearish gap. You don't sell that one, you wait and buy it instead. There's also, let's check another one. If this, we have this one, also not a very good one, but it's significant. We have a support, sorry, a resistance, a resistance, a resistance, a resistance. Price goes above it, comes back to the same place, and then it gaps below everything and closes above everything. So this is a sign that we are upwards. It's the gap is supposed to show that we are downwards in this case, but the price has closed above the level, so it's upwards. Let's check another one. So that is how to read price in relation to the volume. Anytime you see price approaching a key level, then ensure you also monitor the volumes while price approaching that level. If you noticed by chance that the volume is increasing as the price approaches a key level, then just know that there are possibility that that level may be broken upwards. So instead of selling, you look for a buy, and if that level is a support, instead of buying, you look for a sell. Wait for price to break below clearly, then you sell it. Something like this. So there's another thing which I've not said, but I'm actually considering it. We have this one. There's a support here, a support, a support, a support, a support. Then there's this big candle that has gone below everything. Then after the break below candle, you actually see a gap. After this gap, there's an increase in volume here, like that. We mark that like that, also mark that. So the idea here is to wait for places where there's a level being broken, and then you see a gap. After that gap, you see an increase in volume. So when you see something like that, the very first time there's an increase in volume, you're supposed to be interested in a trade. We have a support, a support, a support, a support. Then there's a break below, a break below, break below. After that break below, we see a gap forming. There's that gap, a gap. After that gap, you now check volume immediately. You see there's an increase in volume. So this one didn't go exactly the way it's supposed to go, but you can see there's some attempts to proceed to the lower side. So you could have sold this, but only when the price is back at this place, 2042.8. This is what we look for to sell, but then the correct place to sell has to be around the key level, 2042.8. So I want to put this as a note. The three things to look for, the three things to look for. The very first thing, you have to identify a key level. Identify a key level, which already we've done in this case. Then the second one, check for a gap after the break of that candle. Sorry, that should be the third one. So the second one should be wait for a break, for a break of the key level, the key level. Then the third one, check for a gap after the break, after the break. Then the last one, the fourth one, check for increase in volume, increase in volume, after the gap. Then the last one, wait for a retracement, back to the key level to pick a sell, So what the first one's like, what the second key, what this one, the second one, and the third one, and the fourth one means they just confirm a particular direction that we are indeed downward. So if you're on this chart now and you see a setup like this, there's a key level, then you wait for price to break below it, and then you see a gap, then there's an increase in volume, then those are signs that you're supposed to sell the next candle. So you're supposed to look for a sell immediately after the candle that has the biggest volume. So biggest volume means there are a lot of trades going on, so you're supposed to sell in direction with that break, in the direction of that break. Sorry, we'll also save that gap 38. So all this time that I keep mentioning, I keep talking about the key level, but there's something which I'm not mentioning, that I'm looking at the key level in relation to the trend. I'm not just doing a key level here, then I say the price should break below it for me to sell. No, I look at it in relation to the trend. There's some, let me show you. Assuming you have a chart like this, look oil is much better. Look oil, where is it? Should be here. So the volume's already added already, so there's no point. I'm not going to add it. Assuming you see something like this, you see this a support here, a support which has been broken. Price came back to the same place, then it went down, and you can see some gaps. So like in this case, there's a gap here, price gapped up but then closed above this higher line, 2984.1. it went down, came back to the same place, then it went down, came back to the same place, it went down, then it broke above this level, retraced back to the same place, went up, back to the same place. So from what we now know is that anytime there's a key level and price breaks above it, we expect price to proceed even higher. So what you wait for now is for a gap, for you to see any gap. In this case, this is the gap. So the first thing, we have a key level. First of all, we have a support, which has been broken. So resistance, a resistance, a resistance, a resistance. Then we see the same place being broken and again upwards. Now a support, now a support. So after you see a setup like this now shows you you're supposed to buy. And if you want to trade gaps now, wait for bullish gaps. Like in this case, you see price proceeds even higher, and then you see this gap. There's a gap there. We have a gap. Then after that gap, there's an increase in volume. This candle here, it shows that now we are supposed to continue even higher. This candle, there's an increase in volume. After the gap, we see an increase in volume, an increase in volume, a good sign that we are upwards. So the main thing here is that after you find a key level, you wait for a gap to occur in direction to with the overall trend. Like if price breaks upwards, then look for bullish gaps, and if price breaks to the lower side, look for bearish ones. So in this case here, we have a level, a resistance line which has been broken and price above it. Then you see price continues to gap upwards. These are signs that you're supposed to be buying it. So if you check after this gap here, immediately the next candle has a higher volume. Compare this volume here, the one we are seeing, compare this volume to the others, compare to even these ones. They were less than the volume now we've just seen. So you're on this chart, you identify the chart, this is the key line, we have a breakout, then there are retracement back to the same place, and we've seen a gap in direction to the trend. Then the next candle that follows the gap has a higher volume. It's a sign that we are upwards. You're supposed to look for a buy upwards, something like that. So you can see even in the future there are still gaps, there are a lot of gaps. We have this one, this is a gap, all of them saying the same thing, we are still upwards. We have another one, a gap, There's also that small gap there. We also have that gap there. All these indicate that we are upwards, and as you can see, there's an increase in volume. The subsequent candles always has higher volume. If you see something like this, continue buying it. So these are gaps. These are small gaps, gap. Then we have this gap. You have that gap. Then you also have that gap there. Your job will be simple. Anytime there's a gap, you see something like this and you're in line with the trend, wait for the volume to increase. Then after that, you're supposed to pick a trade in the direction of that trend. So one thing which I've added on this one now is that note trend is still significant. Is still significant. Any gap you choose to trade, any gap you choose to trade has to be in line with the overall trend. So if you're in an uptrend, look for bullish gaps and increase in volume after the gaps. But if you're in a downtrend, look for bearish gaps and an increase in volume after the gaps. So what this means is that you don't just trade gaps, you have to combine volume to it. So if you see a gap, like I see, assuming the price opens here and closes here and then closes above where it's supposed to open, then that's a gap. So you don't buy immediately, instead you wait for volume to increase. And I've now said already how to look for volume. This is volume. This one, there's this dark, there are these several columns. This stands for volume. So anytime you find one spiking higher than the others, the previous one, the immediate previous one, then that's an increase in volume. You are supposed to look for a buy. We'll save that one. Volume explained. So so far we've looked at almost everything I wanted to say for today. We've seen that to trade gaps properly, a gap has to be in line with the trend. That's the first thing. Then good gaps has to occur if levels are broken. Like if there's a key level and that level is broken, then that's when a gap is genuine. Also, when a gap occurs within a trend, then that's also a genuine gap. Like you can see from this point here to the highest place, there are several gaps. You see here we closed, here we opened, that is a gap. We closed here and then we opened, there's a gap. There's a close here and then we open, there's also a gap. So this is in line with the overall trend. This was a genuine gap. If you find a gap occurring where there's consolidation, don't trade that one. Like in this case, there are a lot of gaps here. You can see we are consolidating. There's no clear direction, that is, and then you see a gap somehow. That's not a good one. You don't trade that. Let's check another. Like in this case, you can see there's a lot of consolidation, then in between you see gaps. You don't trade that one. A good gap should occur where there's a clear trend. Something like this. Here you can see we are upwards, and then you see gaps that are bullish, you buy it. So from what I've said, if you notice the trend is upwards and the level has been broken upwards, then you see an increase in volume after that gap, then that's a sign that you're continuing upwards. So another thing, assuming this is a key level, we have a key level here. That's not a very good one. Here, assuming there's a resistance here, then price goes down and then it comes back to the same place. Then while price is approaching this resistance, you don't see any increase in volume. like you have your level here, a support, a support, a support, which has been broken. Price comes back to the same place, goes down, comes back to the same place, then it goes down, it comes back to the same place. And while price approaching this level, there is no increase in volume. Like you can literally see that previously you had even higher volume. There was a higher volume, a higher one, but the candle approaching this one has no volume at all. It has very less, minimal. So something like this tells you that we are likely not going to break above this level. You're supposed to look for a sell. But on the other side, if price approaches a level and you see an increase in volume, then there are high chances you are breaking above it. So that may not be the case all the time. Sometimes the price may approach a level with less volume but still ends up breaking. The best case is where it comes to a level and then it breaks it with a big volume, with a higher volume, that is. So that's what we've looked at today. I hope there's something we've taken, and I have screenshots here which I created for the same. Here, just a second, let it load so that we are able to look at it. Also, this is there are few. This one here, the very first thing I identify, there's a key level. We have a support, there's the candle breaking below it. That's the very first step. Then the second one, the same key level we are seeing has been broken, and then you see a gap forming. So these are the first two things we look. There's a key level and then there's a gap. There's a key level, there's a break below it, and then there's a gap. Then the next one, we have a key level, there's the break below candle, and then there's a gap forming. After that gap, the candle that follows that gap has a higher volume, as I've mentioned on the lower side. So after this candle here, you're supposed to look for a sell, but as I've said, you don't sell immediately. Wait for price to come back to 2814.5, which is here, then you sell it to the lower side. Something like this. There's a gap which has been followed by a candle which has a bigger volume. That's a sign we are going upwards. So after that candle with a bigger volume, you will likely see some consolidation. That's called reaction. We are reacting to this move upwards. Like I've not mentioned that, but it's very important. For every action, like if you see price moves upwards, you can see from this point up to this point, we had several green candles with literally no red candle. You are likely to see an opposite move, and that opposite is called a reaction. Price is reacting to this move upwards. So you, after this gap, there's a candle that increased volume, this increase in volatility, and then there's this reaction to it. So the best you should do is to look for that buy, but on the lower end. I've marked it here, something like this. Like there's this action, the price moves extremely upwards, there is no retracements at all. Then after that move, you now see the first retracement. It proceeds up, then it comes back to the same place. It proceeds up, then it comes back to the same place. All these are just reactions to what has just happened, this move to the upper side. You're supposed to look for a buy, and the best places to buy are the ones I'm going to mark. We are supposed to buy from that point. Also, you're supposed to buy somewhere there, and also you're supposed to buy somewhere there. If you bought it there, you are likely going to pick the entire move. And as I've mentioned, assuming you didn't buy it here, you can still buy it after these gaps. There's a gap, there's this gap here. We have a gap there, we also have a gap there. Immediately now, whenever you see a gap supporting the trend, you now enter trade. So I think that should bring us to the end of today's overview. We've looked intensely at what gaps means. If there's anything I'm going to add the next time we meet, just a second, save that. So if there's anything I've not looked at now, then I'm going to look at the next time I'm looking at the same. So thank you very much. See you again next week at the same time. Bye.